In this new era of AI, you may have heard whispers of job replacement or the end to end automation of all human processes. Now, the reality is, AI presents an opportunity to guide financial professionals and businesses towards a new era of efficiency, accuracy, and strategic prowess. And no, AI will not replace accountants. If you can grasp how AI will affect accounting and learn how to use it, you can unlock a treasure trove of opportunities in a world where data, rules, and precision is paramount. Hello, everyone. Welcome to the Analytics Insight podcast, where we talk about the ever evolving tech space. And I'm your host, Priya Dayalani. Now, in fact, globally, 92% of accounting professionals are using AI. And according to another study, AI in accounting is projected to grow 30% year over year through 2027. And just to add one more fact, Gartner found that 80% of CFOs expect to spend more on AI in the coming 2 years. Let's welcome Pei-Fu Hsieh, co-founder and CEO of AI Accountant, to discuss how AI is transforming accounting from a back office compliance function into a real-time financial intelligence system for businesses. Hi, Pei-Fu, how are you doing?
Good, good. Thank you, Priya. I'm very happy to be here.
Likewise, it's a pleasure to have you on our podcast today, Peifu. And of course, the impact of AI is profound across different industries and across business roles and functions. And one such function we are going to discuss today is the impact of AI in accounting and how accounting professionals can leverage AI technology to ensure that they are helping businesses scale their financial objectives and transformation. And of course, discuss how the future looks like with the integration of AI. So let's get started, Peifu. And with the start, I want to set the foundation about AI Accountant. So if you could help us understand more about the company, its specialization, alongside that, a little bit about you, Peifu. How has the journey been till date? And what led you to become passionate about transforming the accounting industry and founding AI Accountant?
Sure. So we actually have started this company 7 years ago in 2019 in India. And initially, we were a fintech player, basically issuing corporate credit cards to startup. And prior to that, I was a VC investor for about 10 years, investing in different countries in India, in Indonesia, in Brazil, and other countries. And also have held positions at various startups in the region. So accounting was not something that we woke up one day wanting to transform, but rather it's through these 7 years of operating in India, serving startups, serving MSMEs, that we all realized that accounting is the one destination that every company ends up with somehow because everyone needs to do bookkeeping, everyone needs to do tax filing. And so over the years, even before AI came about, we were constantly working with clients and companies to figure out how to handle accounting better. And the moment that AI emerged, say the ChatGPT moment, then we really realized that there's a great opportunity here to transform accounting for the vast number of MSMEs and startups here in India. And so we are really passionate about this direction because we believe this will impact 50, 60 million MSMEs here in India. And it's a category defining opportunity right now.
Thank you for that overview, Peifu, and I'm really glad to hear how your personal experiences and industry challenges and all of this has come together to build an organization that creates real impact. And I think accounting today definitely is becoming a strategic business function with the integration of technology and data-driven insights. Great. So, with that context in mind, let's dive deeper into our core conversation for today's episode, Pei-Fu. Now, in the early stages of any business, every dollar matters. Startups and budding businesses operate in a dynamic environment where agility, cost efficiency, and strategic focus are crucial for survival and growth. Now, amidst all the moving parts, product development or marketing or customer service, one often overlooked area is accounting. Now, gone are the days when you need an in-house accountant or physical files to manage your books. Virtual accounting is something that has come up and is transforming how businesses handle their finances, offering flexibility and scalability. So, you've spoken a lot about virtual accounting in the past. So, what exactly is this virtual accounting, and why do you believe it will become the default model for businesses over the next decade?
Sure. So virtual accounting is essentially end-to-end bookkeeping and tax filing. And this is mostly for companies that don't have an in-house finance team. So companies at this stage typically hire CA firms for the bookkeeping and the tax filing. But because most CA firms rely largely on human, on articles, on young interns to do the bookkeeping. So initially, the service, the quality could be quite good, quite fine. But CA firms also grow. And as they grow and have a larger volume of customers, and when it comes to audit time or audit season or reporting or tax filing season, they would inevitably prioritize the larger clients than the smaller ones because the larger clients pay more. And so what usually happens is that these smaller clients and companies end up being deprioritized. And that naturally leads to subpar quality and sometimes even notices from the tax authorities because tax filing was not filed properly or punctually. And so that's been the case in India for many decades. And how we are really different from all of this with virtual accounting is that we are a AI native accounting firm. And what that simply means is that most of the work, most of the manual work that people do with bookkeeping and tax filing, we have been able to automate it. And we're able to do that because we have an in-house team of close to 100 developers and product managers that are building a product to automate these manual processes. So, but we don't rely on models and software and automation entirely. At the end of the cycle, we still have experienced chartered accountants to supervise and review the work. And what this means is that we get to have the best of both worlds. We get to leverage on the product or the system to automate all the manual tasks. And at the same time, we have highly qualified CAs to make sure that the work output is up to standard and of a great quality. This way, it really doesn't matter whether you're a large client or a small client, we are able to serve you quite well because of this combination of automation and human in the loop, the professional CAs. And I believe this will become the default of business going forward in the next decade or so, because as you have noticed, there are these concepts of one-person companies, OPCs, that are increasingly popular. And what this means is that in general, companies will get smaller and all these functions, it's not just accounting, but you can call it marketing, you can call it legal, you can call it product development, coding. All these functions are shrinking, but at the same time becoming more powerful because they are being automated and they are being streamlined significantly. So this is the most economical most high value for these customers. And so naturally, this will be the direction that I believe most of the startups and MSCs will move towards. Now, does that mean that we will not have companies with finance teams? Of course not. There will be companies that still need professionals in the finance field or accounting field that should be in-house to provide very high valuable outputs, such as strategic advices on how to reduce costs, how to increase revenue, how to grow profit, so on and so forth. So there will definitely be companies that have finance teams, but in general, because of AI, because of automation, the need to really have a large team in-house has really been cut down significantly and will continue to do so.
Well, that's a great perspective, Pei-Fu, and what you're describing is a completely different operating model. One that's digital, collaborative, and built for speed and scalability. And it's also interesting that virtual accounting, when we think of it, isn't just about working remotely. It's about leveraging the power of cloud or automation and real-time financial visibility and access to specialized expertise, regardless of geography. So, in many ways, it reflects how businesses themselves are also evolving.
Absolutely, yes.
Yeah. And with that being said, Payfo, I think when we talk about the integration of AI in accounting, so I mean, it's been probably during the last decade, we have witnessed a lot of organizations integrating AI into the accounting function and ensuring automation of repetitive tasks that consume a lot of time and effort of a human accountants or CAs. But I think, and when finance, when you talk about finance, there are so many factors and so many calculations that eventually go into place. But I think with that also, with the kind of visibility that finance teams are expecting with the integration of these AI tools, sometimes the finance team still get surprised too late
Mhm,
because margins erode faster than expected, cash tightens abruptly, customer behavior changes before anyone notices, and problems continue to be discovered too late, probably at the month end or when a board member asks a very difficult question. So
mhm,
I think with that being said, the issue is not the lack of data. It is not even that the reported numbers are wrong. The
mhm,
issue is that finance still lacks that early visibility into what is breaking as it starts to break.
mhm,
I mean, I mentioned in my earlier response also that, one of the advantages of virtual accounting is probably the real-time financial visibility. Why do you think, despite, accounting systems into place, founders still lack this real-time visibility into their finances?
mhm. Yes, that's a great question because I've been running a company, not just this one, but other ones for over 10 years. And I would say that as a founder myself in the tech space, in the cutting edge of technology, I myself am not able to have access to real-time visibility. And I think that's owing to two main reasons. Not necessarily for myself, but in general, there are two reasons why most founders do not have access to real-time visibility of their finances. I think first and foremost is to understand what these CAs and these accountants are hired to do. Their number one job is to stay compliant, to make sure that the company files taxes properly and punctually. For instance, in India, on the 7th, you have to file for TDS. On the 20th of the month, you have to file for input tax credit. And so a lot of time that accountants spend is to make sure that these deadlines are met properly. And so because it's their number one priority, they really had much time to work on the what we call MIS, the monthly updates. That's the first reason is that accountants are typically hired, be it in-house, be it outsourced, they're typically hired to ensure that the company is compliant. And the number two reason is that when you ask a CA firm to provide you with monthly updates, they will charge you more. And a lot of companies and startups are running on very, very thin margins. And they will have this illusion that they have a pretty good grasp of the finances. They know how much money they're making, they roughly know how much money they're paying. And so they think that the cost of paying an accountant to provide them with the financial updates seems to be pretty low ROI. Therefore, they opt to not do that. But like you rightly said, a lot of times margins do erode faster than you expect, or certain receivables should have been collected earlier, and you didn't realize that it is overdue, or that you should have changed your entire SKU composition or offering because certain SKUs were earning you much more profit, and some were actually losing you profits. And I think a very say telling example is that we once spoke to a D2C founder, so direct to consumer. So basically they're online seller of products. And they sell on different platforms like Flipkart, Amazon, and their own on Shopify. And so they hire CAs and accountants to make sure that they file the taxes. But only after 12 months did they come to realize that they've actually been losing money because the finances and accounting from these platforms like Flipkart and Amazon is quite complicated. There'll be some orders that are returned. There'll be some charges that you've been levied on. There may be certain expenses for advertising, for logistics, for warehousing, for different services that they provide you. And the founder was working really hard every day to make sure that the product is produced, is delivered, any kind of questions are answered by customers, basically doing the thing to keep the company going. But only at the end of the year, when the CA had to file for annual return, did they actually realize that they've been losing money. And that came as a big shocker that the founder actually regretted working harder earlier to find that real-time visibility. So it is something that usually is fine. I mean, the real-time visibility point. Usually, most people do have decent grasp on their finances, but when you need it and you don't have it, it is going to become a real pain for you and the company. I think this is also another reason why we built AI Accountant and offer virtual accounting is that because we are a AI native accounting firm, we provide a dashboard that founders can access and see their real-time financial data. So we are not calling them up, giving them updates on a daily basis or anything like that. We simply do the books. The numbers in the books are automatically reflected in the dashboard. The founders access the dashboard. They see their revenue, their profit, their SKU breakdown, and various analysis that's happening in their business on a real-time basis. And they make decisions as they see fit. So that's really one major differentiation that we have against any other CA firms. And frankly, this is quite revolutionary because this is not just in India, but if you talk about on a global scale, there are very, very few founders of early stage companies or MSMEs that actually have access to their real-time finances because all their systems are fragmented. They have a bank that they can access. They have a CRM that they can track the customers, and they have a billing system that can track the billing. Everything's broken up, right? And they don't really have, and really, there's no founder that actually accesses the accounting softwares to check the numbers because accounting softwares are not built for founders. They're mainly built for accountants to do the books. So you see, because of all these fragmentation, founders historically and still to this day, large do not have access to their finances. And that is the one point we intend to change. And that is to provide access to people's own finances so that they can make wise and timely decisions for their businesses.
I agree with you, Pei-Fu, and I think your perspective also highlights a misconception that many founders have, and that is that investing in accounting software automatically translates into financial visibility. But in reality, having data isn't the same as having actionable insights.
Mhm.
This is because, the organizations today generate enormous amounts of financial information. But unless that data or information is connected and easy to interpret or even current flowing, I think decision makers are often left reacting to problems instead of anticipating them. And as in when the business scales, founders need more accurate records. And with having said that, actionable insights, um, and when needed at the right time, I think they help make them more confident and take more data-driven decisions around cash flow or profitability and even future investments.
Absolutely. And I
Right.
think one thing to add to there is that founders are used to operate their business with their instincts
Hmm.
and
Right.
with whatever comes their way. Someone tells them that a customer hasn't paid. Someone
Hmm.
tells them that a supplier hasn't been able to deliver a product timely, and then react to these instances, and that's common, right? I think gradually founders will learn and realize that there's actually a better way to make things work, that they can have access to their finances just on their fingertips, just like and their personal finances. You can open an app and see everything there.
Right.
This is something that currently does not exist for most founders, but it's here. This is happening that founders are able to have access, but it takes some time, I believe, that
Hmm.
founders realize that actually this is something that is both economical. Okay, in the past, this is not economical because it requires humans to actually spend time to crank
Hmm.
numbers, provide the dashboard, provide the MIS report, put in a format that's easy to read, so on and so forth. But today, because the labor part has been taken out, it has been automated. So that actually makes it economically viable to provide real-time access.
Hmm.
All we do is actually to educate and inform the founders that look at this new technology. It is possible that you can see your finances and make your decisions accordingly. And I believe that will actually make everyone smarter, or at least much more aware of exactly what's happening. And that actually just kind of, because as founders, everyone goes through 10, 20 issues every day. And if it's not fire that's you're seeing in front of you, you tend not to be able to figure out that there's actually a major tax issue that your company hasn't restructured, or that the cost structure of your company is actually suboptimal, or that there are certain revenue optimization angles that you should be thinking about. Though all these are out of reach because everyone is just so busy trying to deal with whatever comes their way. And I think that's the part where not just us, but anyone building in AI will be providing various kind of services so
Hmm.
that the founders can really focus on what they're good at.
Right.
Everything else, be it finance, be it coding, be it supply chain, that is not their core competence. All of that can be optimized and
Yeah.
brought together under one umbrella.
Mm-hmm. Right, Payphone. I think the kind of problem that you mentioned is I think pretty much prevalent in the India's business landscape. Now, one of the core grassroots reasons would be, reluctance to change, and also having that assumption that, oh, investing in AI tools or softwares, involve high costs and training. But I think, India's economic story, if we talk about it, it's the sheer scale and diversity of its business ecosystem. You have small family-run enterprises, startups, mid-sized businesses. So all of this kind of, the MSMEs particularly form the backbone of the country's economy, and they contribute significantly to the employment and GDP growth. So
Mhm.
now India has over 60 million MSMEs. What unique challenges and opportunities make India particularly well suited for virtual accounting revolution?
Yes. So India has the largest number of MSMEs in the world. And within this universe, most of them are very small teams and naturally do not have a finance team. And therefore, most of these SMEs actually have to outsource their finance and accounting to somebody, usually a CA or a CA firm. And this really makes all these companies quite the ideal user for virtual accounting because for the longest time, all these MSMEs can now have access to their finances and compliances. And it seems quite, even compliances, meaning that their CA has filed their taxes, has done such and such audit or kept their books. All of these information currently are with the CA. And a lot of times we hear founders telling us that they've been chasing their CA for the past 3 months and they simply have not been able to get a hold of the CA. No, it could be that the CA was ill or busy or away or some other reasons. But we hear these stories over and over because it's such a labor intensive work that inevitably somebody will be left out. And so this is really the India is really the number one country and market in the world that will see the most value in virtual accounting because we're able to automate all the manual tasks and provide real-time access to these MSMC founders who form the backbone of the economy. So if you think about enterprises versus MSMEs, enterprises have the capital to spend millions of dollars in ERP systems that can track and link everything together with a beautiful dashboard for the management that tells them minute by minute changes in everything that they want to see, be it revenue, cost, profit, margin, cost center, suppliers, SKUs, everything. They have that at their fingertips, but they spend millions of dollars and they hire dozens of people to make sure that system runs accordingly and is set up properly. That's always been a privilege of the enterprises, although it comes at a cost, which they do have the money for. But that is simply not something that any MNC really have thought about. They don't even know it's possible because they were thinking, okay, this is how things are. We just give our receipts and invoices to the CA every month. He or she will do the books and file taxes. End of story. They don't even want to spend that time to ask questions because they know it's going to be difficult to get a feedback or that suddenly the CA will be charging more because they're asking for too much of their time, so on and so forth. So because historically that's not been possible, therefore, MNC owners have not been even trying to find a solution. And so I think this is a very unique opportunity in time that we are able to provide such a service at a very economically viable pricing point and introduce this to everybody. And because accounting and bookkeeping and tax filing is needed for everybody, therefore it's going to be something that so many people will see value once they actually see it in their eyes. It's kind of everyone will have their jaw-dropping moments with AI in different fields. And I think accounting is about to have its jaw-dropping moments in India.
Very well said, Pei-Fu. And I think that's an important point because India's MSME sector isn't just large. It's one of the biggest drivers of employment and economic growth. Yet many businesses struggle with limited access to qualified financial professionals, and rise, and even the compliance requirements are rising. So the need to manage their finances, is more strategic now. And
Mhm.
it's interesting to see, how technology is helping bridging this gap. Virtual accounting is empowering businesses to have access to, expert financial guidance without the traditional costs involved. And I think making those high quality finance functions far more accessible than ever before.
Mhm. If I may just add one point here, it's really that although there is this is the largest market in the world in terms of size for MSMEs, a lot of companies have not been able to and have not wanted to serve MSMEs because of the ability to pay from these MSMEs. And so naturally companies will target mid-market, target enterprise clients because the economics there make more sense. Or they would, and I speak to a lot of startup founders, or they will simply go overseas and look for opportunities in the US are significantly higher. And so what's happening is that most of the talents in the startup world or in the tech world are either focusing on the mid-market or the enterprises in India or focusing on overseas clients that are able to pay more because they have to make the economics work. And that's all quite understandable. Right now with AI, it's an entirely new chapter that even the MSMEs can be served quite well at minimum cost. And that I believe is the fundamental disruption that we are going to see with AI for the accounting space. So I'm really, really excited about the next 5, 10 years that finally the 60 million MSMEs in India can have access to enterprise level financial dashboards and understanding of and tracking of their own compliances because because this is actually very simple. Just for it sounds very simple for CAs to send a WhatsApp message or send an email to their clients telling them that, hey, I filed your taxes for TDS on the 7th properly. And I would or any kind of these messages, right? It sounds quite simple, but it's never the case. The CA simply do their job, but the clients don't know whether the job's been done or not done because there's just too much going on in the CA's life. So I think with AI, this whole picture is going to change. We are going to see a mass democratization of access to financial data, and then compliances here in India.
Very well said, Peifu. And I think for most Indian businesses, the question is not whether AI in accounting and finance will matter, but how quickly they can adapt before compliance demands or real-time enforcement or shifting talent expectations make it unavoidable. AI is already reshaping how financial operations are managed, and I think early adoption is becoming a competitive advantage rather than an option. Thank you so much, Peifu, for taking all the time and effort to be on a podcast today and, giving us more insights about virtual accounting and how this gives companies the ability to, adjust quickly to shifting market dynamics and make data-driven decisions, and how it is the way of the future. And those that adopt this revolutionary technology will have an advantage in the shifting financial landscape. Thank you so much for your insights. It was lovely chatting with you.
Same here. Thank you, Priya, for inviting me. It was a great honor to speak to you.
Thank you. So, this is for our listeners. I hope you enjoyed today's discussion around virtual accounting, how it is not just a trend, but a smart strategies for MSMEs, particularly in India. And I think making the right financial moves early on can mean the difference between thriving and surviving. Stay tuned for upcoming episodes, and you can view all our previous episodes on Spotify, SoundCloud, and YouTube. Thank you so much.